Starting with the white paper info, Towns Protocol is a decentralized messaging platform built on an Ethereum L2 base, with features like programmable spaces and on-chain memberships. The tokenomics show a significant circulating supply, 2.1 B out of 10.1 B Genesis supply, with max supply increasing to 15.3 B over 7 years. That's a lot of potential inflation, which could be a bearish factor if not managed well. The vesting schedules for investors, team, and community reserves mean more tokens will unlock over time, adding selling pressure unless demand keeps up. Looking at the news, there's mention of major exchange listings like Binance, Coinbase, and Bitham. Listings usually increase liquidity and visibility, which is bullish. However, some articles note that after the initial listing, the price dropped 50%, possibly due to early investor selling. The high trading volume post-launch indicates interest, but also volatility. The technical analysis shows mixed signals. The RSI is around 51.61, 14-day, which is neutral. The MACD histogram is slightly positive, suggesting some upward momentum. However, the Fibonacci levels indicate resistance around $0.0137 to $0.0171, which is higher than the current price of $0.0115. So, technicals aren't strongly bullish right now. Regulatory factors are covered in the MiCA white paper, which classifies Towns as a utility token, not a security. This reduces regulatory risk in the EU, which is positive. However, the project dependency on Ethereum's L2 and base network could be a risk if there are issues with those platforms. Adoption metrics are crucial. The protocol's revenue from fees, over 901 ETH, is used for buybacks and burns, which could counter inflation. If adoption grows, more fees would mean more burns, supporting the price. However, if user growth stalls, the buybacks might not offset the token unlocks. Market sentiment is another factor. The Fear and Greed Index is at 29 fear, which might indicate a bearish market overall, but altcoin season index is rising, which could help if money rotates into outs. However, Towns' price has been down 63% over 90 days, so sentiment around the token itself is negative. Looking at the team and investors, they have backing from A16Z and Coinbase Ventures, which adds credibility. But the vesting schedules mean insiders might sell when their tokens unlock, especially if the price recovers, creating sell pressure. The project's roadmap includes governance activation in 2026, which could be a catalyst if it leads to positive protocol changes. Also, plans for Android expansion and AI integration might drive user adoption, which would be bullish. In terms of risks, the circulating supply is set to increase significantly over the next few years. For example, in 18 months, circulating supply jumps to 5.6 B from 2.1 B. If demand doesn't scale with this, the price could drop further. Additionally, the reliance on node operators and the success of the buyback mechanism are critical. If node rewards aren't attractive, the network security could suffer, and if fees don't sustain buybacks, inflation could hurt the token value. Competition is another aspect. Towns is up against established platforms like Discord and Telegram. Their ability to capture market share will determine long-term success. The white paper mentions unique features, but execution is key. Putting this all together, the main factors are token unlocks and inflation, exchange listings and liquidity, protocol adoption and fee generation, regulatory stance, and overall market sentiment. The conclusion should balance these elements, highlighting both potential growth from adoption and risks from supply inflation and market conditions. Towns Protocol is a communication infrastructure project designed to enable developers to build real-time messaging applications. It is composed of an EVM-compatible Layer 2 blockchain, decentralized stream nodes for message delivery, and smart contracts deployed on Base and Ethereum Layer 2. Towns Protocol enables the creation of programmable group chats called Spaces. Each space is owned and operated by its creator or community. Spaces support encrypted messaging, on-chain memberships, staking mechanisms, and monetization through smart contract functionality. The protocol is designed to allow users to build communication platforms without relying on centralized intermediaries. Towns Protocol is developed by the team behind the Towns application and was founded by the creators of House Party, a social video app acquired by Epic Games. The team is based in the United States and is backed by investors including A16Z Crypto, Coinbase Ventures, and Benchmark. Towns introduces a model in which messaging environments are programmable and owned at the application level. Unlike conventional social platforms, Towns does not retain control over user data, monetization, or access. Each space can implement custom rules, membership fees, access gating, or staking-based incentives through smart contracts deployed by its creator. The ability to stake directly to a space introduces a new participation model. Token holders may support spaces by staking dollar towns to them, which may grant them access, rewards, or decision-making influence within that space. Token supply and distribution. Towns Protocol has an initial supply of $10 billion Towns tokens. The distribution is as follows: 57% allocated to community for grants, airdrops, governance rewards, and long-term ecosystem growth. 35% allocated to team members and investors, 8% allocated to node operators and delegators for bootstrapping decentralized infrastructure. Towns is deployed on Ethereum and Base. It is available on selected centralized and decentralized exchanges. Users may also earn tokens by participating in spaces, staking, or contributing to the development of the protocol.